Good day and welcome to the review of Chapter 12, Unemployment Insurance. Remember, the purpose of unemployment benefits is to protect employees from involuntary job loss for reasons that are not their fault. An employer's unemployment contribution is a percentage of the employee's wages up to a max. There are federal and state levels, with each state establishing its own wage base. Although each state calculates the amounts differently, there are two factors that are similar. Number one, the employee's actual claims experience, and number two, an adjustment to cover shortfalls in the fund. Because of the experience factor, hiring and firing practices can have a significant impact on the unemployment taxes that are due. If an employee has worked for multiple employers, which employer is responsible for unemployment benefits? One way is to look at the base period, which is the most recent for employees' last 5 completed calendar quarters before they applied for unemployment benefits. If an employee only had one employer during that time, that employer would be responsible for 100% of the benefits. If an employee works in more than one state, it is essential to look at factors such as substantial work and the state of residence, which is also where the state wages are reported. We have talked a lot already about independent contractors. Because they are not employees, they are not subject to unemployment tax. Also excluded from unemployment taxes are partners in a partnership and students working for their schools. In simple terms, an employee must be employed in a job that is covered by unemployment benefits, be unemployed or underemployed, be actively looking for a job, be able to perform work, and not given a severance package in most cases. Remember, to receive unemployment benefits, an employee must be out of work involuntarily through no fault of their own. Those employees who have been fired or leave work voluntarily are disqualified from receiving unemployment. As said earlier, in most cases, employees who resign are not eligible for unemployment insurance. However, if it can be shown that the employee resigns for a good cause, such as discriminatory working conditions or failing to provide pay, well then in that case, that employee may be eligible for benefits. If employees are on strike due to a labor dispute, unemployment benefits would be denied to those employees. Also remember, unemployment laws do not force workers to become strike breakers. Employees must file a claim with the state agency if they lose their job. Because there is no retroactive pay, it is essential that the employees file as soon as possible. The section in our text entitled Claims Procedures reviews the specific steps to the process. Our chapter concludes with the benefits section. The amount an unemployed employee receives is determined by the formula based on their former wages. This concludes the review of the Unemployment Insurance chapter by Charles Fleischer. Have a great